Shocking news today out of the Bank of Canada, raising interest rates by 1%, making that overnight lending rate 2.5% now. This is a decision that will ripple through the Canadian economy, affecting everything from housing prices to variable rate mortgages, adjustable rate mortgages, fixed rate mortgages, vehicle loans, and so much more. Today, we're gonna take a look at what this means for you, the consumer, someone who's thinking of selling or buying in the last half of the year, whether or not interest rates are going to continue to go up later on this year, what you can do to get prepared for that. Also, what's gonna happen to Canadian house prices, and how will this all affect our local Calgary market? Lots to unpack, let's get started. All right, guys, I know this is a bit of a departure from the kind of content you're used to seeing on this channel. With over 31,000 people in this audience now, I'm humbled. It's meant the world to me and my family. Thank you. But today, I know that many of us have some uncertainty about the future, what's going to happen. So I thought, let's just take a moment to address that and speak to what I think we could see play out in the real estate market. And no, I'm not gonna give you some salesperson shtick about how it's always a good time to buy or it's always a good time to sell. We're not gonna sugarcoat anything. We're simply gonna look beyond the headlines and see the full picture. And I really wanna get a conversation started with you, our viewers, because I'm curious what you think. So let us know in the comments, what did I get wrong? What am I not seeing? And what do you think people should be doing with their money, with their investments at this time? If you're like many of us, you're probably asking yourself, what is the Bank of Canada thinking? Like, why would they raise interest rates and increase costs for Canadian households that are already dealing with runaway inflation? It doesn't seem to make sense until you realize what dragon they're trying to slay. And that dragon isn't household debt. That dragon is inflation. Inflation is the only thing that's on their mind because, in fact, the Bank of Canada's mandate around monetary policy is simply to keep it at about 2% per year. Now, recently, they've shifted that up to 3, so a range of 2 to 3%. But right now, we're currently running at 40-year highs. And I know you felt it. I sure have. You go to the store, right? A bag of chips is like $6. Gas, housing, rent, mortgage rates, it's impacting every aspect of our economy. And if they don't get it under control, it would be bad for all of us. So if you're curious just how far Tiff McCallum and the Bank of Canada are willing to take this in order to bring inflation back into that target range, take a look at their own words here.
If we move too slowly, inflation doesn't come down. It starts to become embedded in people's expectations. People start to think, and this is what happened in the 1970s, people start to think inflation is here to stay. And if that happens, it becomes much more costly to get it back down to the 2% target. In fact, you probably would have to have a real slowdown, maybe even a recession to do that. That's the lesson from history. So by normalizing reasonably quickly, right now, the economy is strong. It can handle higher interest rates. It actually needs higher interest rates to moderate spending, to bring demand and supply in the economy into better balance, and so inflation comes back down.
Essentially, he's saying they are willing to manufacture a recession in order to ensure that they fulfill that mandate of lower inflation. What does that mean for us? So are we gonna face a recession? Will housing prices crash? Well, to get the answer to that, we're gonna have to really first understand how we arrived at where we are today. About a year and a half ago, just 8 months into the pandemic, I posted a video on this YouTube channel that was kind of contrary to what a lot of people were saying. A lot of people thought, hey, the economy's shut down, we're in a second wave of a pandemic here, housing prices should obviously crash. But it was clear that they actually weren't going to do that. I had thought that there would be an affordability crisis, and we were starting to see things like 1% interest rates on mortgages just to try to prop up the economy. And as it turns out, that's exactly what happened. Canadian homes went up in value hugely, all because central banks around the world and right here in Canada were loosening up credit and dropping interest rates to near zero. And it's pretty obvious that all of this was going to happen because Tiff McCallum told us what the central bank policy was going to be. He said, hey, we're gonna keep interest rates crazy low, so it is safe now and for years to come. If you wanna go Take that vacation, buy that car, buy that bigger house. If you're a business, take out credit, build a factory, hire on employees. He was giving everyone a green light to spend. And look what happened to assets. I'm not an economist, but I do understand this simple concept. If the cost to borrow money is cheap, then the value of other asset classes will rise. That's why we see the cost of homes going up and virtually all consumer goods, because there are too many dollars chasing too few goods. And of course, when you add in supply chain disruptions from the pandemic, that all leads us to where we find ourselves today. Now the reverse, it's also true. When you increase the cost of borrowing, people borrow less money, and that means economic activity slows down. Consumer spending, housing, these are massive drivers in the Canadian economy, but if people can't afford to pay those elevated prices, oftentimes they will wait. That's what brings inflation down, and that's why the Bank of Canada is taking these steps. So then, obviously, housing prices are gonna crash, right? I know many of you in the comment section right now are nodding your head violently, but listen, there are 4 other things I want you to keep in mind before you draw that conclusion. First off, Canadian households have significant amount of equity in their homes. So why would the market crash, right? For that to happen, they'd all have to sell off their house at the same time. And why would they do that, right? Oftentimes these homes, their lines of credit, the equity that they have in their homes help them weather through storms like this. So even if many homes were to come down in value, even 10 or 20% temporarily, you still likely have more equity than that in your home, meaning you're not gonna be rushing to take it to the market. Number 2, unemployment is at the lowest level on record. Think about that. 4.9% is where we're currently at today. That means that people have jobs and they're able to service their debts. Right now, I have heard some rumors, of course, that there are layoffs coming, there are some cutbacks coming, and yes, could that eventually have an impact on the economy? Potentially. But right now, we are at record lows. And it's those jobs that are going to allow them to continue to pay their mortgage, even when those mortgage rates increase and the cost goes up. And that's for one good reason, because of something that Canada has instituted that was super unpopular when it first came in. And it's my third reason, the mortgage stress test. Remember that? That's that 2% differential that you need to qualify for when getting your mortgage. Basically, if you're going to pay, say, a 3% rate on your mortgage, you'd have to qualify at a 5% rate. Now, that was all simply because they knew mortgage rates were artificially low. And if people absolutely maxed out their debts, they wouldn't be able to service those debts if the interest rates rose. Well, now we're in that environment. Interest rates rising 2% has made it so Canadian households can at least shoulder that debt because it takes some of the sting out of those rates. Had we not had that stress test in place and we've risen as quickly as we have this year, many Canadian households would be on the brink of disaster. The 4th reason, we have a housing shortage in Canada. So think about that. We are undersupplied for new housing and new construction for all of the Canadians' demand. And that demand is going up. We have immigration rates of over 400,000 new people moving to Canada every year. All of those people are going to need a place to rent or a place to own. And that increase in the demand for housing should offset some of the pain of those higher interest rates. The truth about the Canadian housing market crashing is a bit more complicated than those sensational headlines make it, and honestly, a lot less dramatic. And if you dive into the data of markets even like Toronto and Vancouver, what you'll find is that it's not true that all of those communities are going down in value or that sales have dropped off at the same rate. In fact, it would appear that some of the most speculative investments are the ones that are actually taking the largest adjustments. But there is value in the market, and we're seeing that in places like Montreal and the Prairie provinces where inventories are low, sales are still high, and there are other economic factors that are helping them absorb the impact of these higher interest rates. Are those negative headlines the canary in the coal mine for what's to come with Canadian housing? Honestly, I don't know what the future holds, but I will say, when we consider everything beyond just interest rates, there are some real bright spots in the Canadian economy, and one of those cities is my hometown right here, the YYC. I'm talking about Calgary. Alberta is set to lead the nation's economy. Just a year ago, they were talking about a double-digit deficit, but yet we ended up with nearly $5 billion in surplus for our provincial budget. All of this is leading to future investment in our city, in the diversification away from oil and gas, yet still that primary industry, it is growing, it is really strong right now. And with so many people coming to Canada at a time when the world is so uncertain, all of this bodes well for a province like Alberta, and Calgary is voted the third most livable city in the world in a recent study. Now that study, it actually looked at all the various factors: safety, opportunity, economy, housing costs. I mean, that's pretty cool. And I have to agree, this is the one biased part of the video because I live here, my family is being raised here, and I love it. But there's one more question that we haven't answered yet. Is now a good time for you to buy or sell your home? And the answer is maybe. Even if you're an investor, now might be the perfect time and it might be the worst time, right? So it all depends on your horizon. If you're an investor who's buying a property purely for rent, well, run your numbers. Rental rates are high right now. And so if you want to buy and hold a property for years and have the renters pay off that mortgage, now could be a perfect opportunity to lock people in to a 1 or 2 year lease. But if you're an investor who wants to flip a property and just put it back on the market, there's just too much uncertainty to take action at this moment. You might want to sit on the sidelines and see where we're at over the next 6 to 9 months. That way you can dip in when you are confident that you know which way the market's going and make a return when you buy the property, not when you sell it. If you're a first-time home buyer and you're currently living at home, you're not paying any rent, I would suggest just stay. Now, I would suggest that in a seller's, buyer's, and a balanced market because the cost of home ownership or rent is high. Save your money, build up a bit of a war chest, and when we know which way this economy is going, you might be able to jump back in and make an even better purchase then than you would today. Even if it's not cheaper, there just might be more selection to choose from. Waiting is a cautious but probably pragmatic approach. But you also might be a first-time home buyer that just had your rent increased like so many other people, and you have a good secure job, you have a deposit saved up, and you don't plan on flipping your first home. Well, in a case like that, if you're planning to stay for 3 or 5 years, you know what? Now is a great time to buy. Stop paying your landlord's mortgage, start paying your own. In fact, there's this old adage in real estate: don't wait to buy real estate, buy real estate and wait. So if you are thinking of selling your home, I mean, just give us a call, of course. But seriously though, the next 60 to 90 days could be your best opportunity to get the most amount possible for your home in the next 2 or 3 years. Now, I'm not saying that prices are necessarily gonna drop, but there's not that many people saying that they're really gonna shoot up either. So I don't think you're leaving any money on the table, and you're probably hedging your bets against the downside. The market's still active here in Calgary, and it's also a great time of year to showcase your property because it's beautiful here in summer. Look, I get it. I'm a real estate agent, and so because of that, you might be looking at all this and think I'm trying to pitch you or sell you. At the end of the day, it doesn't matter who you work with, me, another agent, I don't care, but find someone you can trust. Someone who's going to listen to your family's needs, understand what your motivations are right now, and can advise you on whether or not now is the right time to act, maybe in selling your home or buying a home, or whether it's better or not for you and your family to maybe just press pause. At a time like this, you need that sort of guidance. You need to understand what's happening in the market and whether or not the fear, uncertainty, and doubt created by those headlines should be motivating you at this time to take an action that might not actually be in your best interest. So here's what I think is gonna happen. Markets go up and down, but everything's gonna be all right. You see, people who hold real estate over the long term, they always win. But those are some of my thoughts, so why don't you let me know what you think? Put it in the comments below and subscribe if you like this kind of content. We plan on doing a little bit more of it. And don't worry, we'll be back soon with some more great property tours.